Welcome back. You're still tuned into Halftime Report on CNBC TV18. But let's talk about a specific company now. Borosil Renewables is the next management on the show. It reported what was a good set of quarterly numbers. The sales volume came in healthy. To discuss more, we have with us Pradeep Kheruka, who is the Executive Chairman, Borosil Renewables, joining in now. Mr. Kheruka, thank you very much for taking the time out. Well, you know, what stands out is the EBITDA recovery, which has taken place year on year. EBITDA of around 15.5 crores versus a loss on a year-on-year basis. Can you tell us what led to this turnaround and what is your guidance? Okay, I think...
Sorry, I was muted.
Yeah, yes. Go ahead.
Actually, the EBITDA turnaround has come principally from higher prices. We have been selling in the past at a very, very low price, trying to match the dumped prices coming from China, which were selling well below the actual cost of production, even for them. And the other thing is also a growth in volume. So we've achieved a growth in volume as well as a growth in prices.
Right. How much have been the growth in prices? And if you could tell us what the current prices are versus the previous quarter so that we can get an estimate on how the EBITDA run rate will be. Because you've gone through the cycle of the downside and now it is looking up. So are the current quarter prices better than what they were in the previous quarter? And to that extent, what's your EBITDA uptick likely to be this year? If not this year, at least the first couple of quarters where you have visibility?
So I'll tell you that the EBITDA uptick is looking better for the current quarter. The last quarter from January to March was a time when we'd just gotten the provisional duty announced in December, and then we were increasing prices gradually. You can't do these things abruptly. We are now pretty close to the minimum import prices, which have been declared by the government. And so EBITDA currently is higher than what it was in January, March. So EBITDA should do well. We are also producing and we are selling. There's robust demand for the production. So at the moment, everything is looking like it's on track.
What's the absolute pricing right now? Because I remember you had said that 56,000 per ton is a fair price as seen by the Government of India. Imports that time were close to 28,000 rupees per ton. This is as of November, December that we were speaking. Now, currently, what are the prices at?
The current prices are nearly at the rate of EBITDA, nearly at the rate of the imported price, which is about...
Sorry, how much is that?
About 154 rupees per millimeter. Sorry, 54,000 rupees per ton. My apologies. 54,000 rupees a ton.
Okay. All right. So, you know, just wanted to focus on the European market for a bit. We do understand that there's been some amount of demand pressure in the European market. Can you just take us through what the current scenario is and what is the dumping like which is taking place from China?
So the European market, I can share my knowledge and information with you. You see, for the last calendar year 24, the Chinese dumping had reached unprecedented levels in Europe. They were dumping modules at an alarming rate, at alarming prices. Now, this did show that the installation in Europe went up to 65 gigawatts during the year, which is a very high number. And but most of it came from China. And Europe had very little to do with this installation. In fact, the module manufacturers, the leading ones, all shut down. This sad state of affairs was because of a political problem in Germany, and that led to elections. And now the new government, which has just been sworn in, has already announced that manufacturing of solar products in Germany is very high on their priority list. And part of the deal that they have struck with their coalition partners is $100 billion of investment in solar. So that's a very strong number. And the European Union Parliament has mandated that with effect from the 1st of January next year, 40% of all installations must come from European manufactured modules. So all of this portends very strongly for a resumption of production in a very big way in Germany and in the rest of Europe. This has already been activated in Italy and in Austria, and demand from these two countries has surged, which has led to a reasonable resumption in the manufacturing of solar modules. So right now what we are doing, we are looking at sourcing annealed glass from outside and tempering it and processing it and selling it in Germany and elsewhere in Europe, which will reduce the loss numbers that we are currently seeing. And hopefully, with the new government having assumed office last week only, soon enough there should be a proper program to sponsor and to relaunch production in Europe. The moment that happens, we are the only solar glass producers in the entire European Union.
Right.
So we'll have the first count on that, and I don't know if it becomes very good. We may even have to double our production there.
So operationally, what is the loss that you make in your Europe subsidiary right now? And does it break even in the next couple of quarters so that we get a swing factor? What's the kind of EBITDA that is expected from there?
You see, we are losing a lot of money. We're losing about nearly 800 to 900,000 euros every month right now. But hopefully from July, we should see a downturn in that. If we start production of tempered glass there based on imported glass, then that should reduce the EBITDA loss. That should reduce the loss by more than half. And the moment we have a little more firm news about resumption of production, then that will cause hopefully the loss to go away and maybe even some profits to be seen.
Okay. But what about profits on a blended basis? While your margins have done well, and considering that you do have these variables coming in from Europe, what can you guide on the bottom line for the year?
That's quite challenging for me to give any guidance on the bottom line for the year, because even when we were looking at anti-dumping duty, I was quite sure, I was very positive that it's going to come, but it did come as a provisional duty in December, and then we had to wait virtually till the last date when the final duty was announced. So right now, at least so far as India is concerned, the duty is final, and it is there till the 5th of December 2029. So for the Indian operation, it kind of gives us a clear runway ahead on what needs to be done, and we'd already taken permission from the board to step up production by 500 tons per day. Now, when I'm looking at the equipment which is available, maybe we could aim for a little bit higher production than 500 tons per day. But since so far the announcement in the board and the stock exchanges is 500 tons, I shall not go beyond that today in my conversation with you until this is being made public, and then then it becomes public.
Take that point. So you are for sure going to increase your productions by 500 tons per day, and it could actually be more than that as well, which you will apprise the exchanges of. Final question, during peak periods, your margins were upwards of the 20% mark as well. We've seen that move to around 4% with the European losses coming down, with the Indian prices increasing, and now you have this certainty of, duty regime over the next 5 years as well.
Yeah.
Do you see them trend towards those levels, at least in the second half of this year? Is that a possibility?
We look, this is a forward-looking statement that I normally do not make, but in this case I shall. And I would say that an EBITDA margin hovering around 30% is something that I cannot disclaim.
Okay. 50% is what you said, huh?
No, 30.
30%. Got that. Take that point. Thank you so much, Mr. Kheruka, for joining in and giving us those details. The next year looks good for you, and the year after that as well, perhaps even better, with the European loss-making operations turning profitable for you. The stock holding up fairly in the green. Take a short break. Come back on the other side. We talk trade with Sachidanand Uttekar of Trade Bulls.